Let's take a look at some charts on ETH from this week's article on Brave New Coin. So ETH price is obviously at an all-time high, but so are many of the on-chain metrics, Google Trends. Everything's pointing up right now. So it's hard to be bearish on something that's in price discovery and has all the evidence that this should continue. There's no divergences in the on-chain data. I'll show that all in a second. These are all market caps here. ETH just obviously on a tear away from the mid caps, now some low caps, and just general altcoin skullduggery is going on, and there's tons of action and movement there in the DeFi universe, a lot of which isn't shown on this chart, but ETH itself on a collision course for $2,000 ETH, most likely. If we look at the total value staked on the 2.0 contract, it's also increasing rapidly to 3 million. I mean, a lot of this stuff is just simple to supply and demand. I didn't show ETH in the article, the Grayscale OTC market, but that has opened up again and buying volume is happening there. So there's just constantly supply being sucked away. This is like a certificate of deposit. You can't take this out. This is in here for good until ETH 2.0 is live. Now there are various wrappers and stakers and things you can do to manipulate the ETH sort of in here as far as taking it in and out. But the way I see this is just a great way, just like the ICO treasuries, but even better, just to suck up supply. And this can't be sold on the open market, right? A big question for me is if ETH has 4.3% inflation, why isn't everything just mooning, right? I think a big part of that is fees and profitability for ETH miners right now is astronomical historically to where it was months and maybe years ago. It is, to me, creating a massive natural selling pressure that's just keeping ETH from moving up. Because if I'm an ETH miner, I am selling straight to cash as soon as I get my ROI, and then maybe holding on. You know, I don't know the mentality of the ETH miners specifically, but in general, miners are bad traders based on historical hedging practices on Bitfinex specifically. But what I'd expect is you're selling everything to capture that ROI, and then maybe you'll speculate on the remainder after you capture that ROI. But to get that ROI may take some time, quicker than obviously these older ASICs. And this is another reason why GPUs are 2 or 3x their price right now, the latest and greatest GPUs, because they're being used to mine Ethereum and other stuff. So we're seeing that it just explode hash rate, and there's a new miner coming later this year, which is probably already starting to mine as well, and that's exploding hash rate. Here's the block count and inflation rate. So inflation continues to decline extremely slowly, and will probably continue to do so until 2.0 or until EIP 1559, something else I didn't quite discuss in the article because I don't think anybody knows the exact specifications of that, but it may introduce some sort of burning mechanic in the fee structure. So that will play a role in inflation. Block counts just hovering basically where they have been. You can see block counts just keep increasing with each sort of ice age. And that also keeps inflation relatively high because, if you're getting more block reward, more fees, then fees won't affect inflation, but block reward will. If we bring in Tether into the conversation, USDT ETH is really the big one that most people look at these days. USDT on Omni is, basically a shell of its former self and or just a non-factor in general. It still has quite high average transaction sizes because there are very few transactions, whereas, I forget what I said in the article, something like 20%, 17% of the total transactions on Ethereum are USDT ETH. So that continues to sort of stay in the ranges as far as the total percentage of ETH transaction counts. And mean transaction sizes for USDT ETH are at an all-time high. So this is people onboarding or moving to borrowing and lending platforms, or taking profits from ETH, some sort of rotation wealth effect type thing. But the mean transaction sizes, despite transactions being essentially where they've been over the past year, average transaction size is skyrocketing here. If we look at the total size of a full node, something that no one will pay attention to until it's too late, and then they'll realize, oh, this was actually important, as is always the case with decentralization crisis. Full nodes are quickly approaching 7 terabytes, and there are plenty of nodes, quote unquote, on the network. Many of those are behind Infura or cloud hosting services. So to truly measure the decentralization of ETH is difficult, because the ETH people will tell you there's plenty of partial nodes, and the non-ETH people will tell you, okay, that's great, but unless you have full nodes, a robust full node network, then there are going to be issues with centralization. Unless you have a robust distribution of full nodes geographically, there's going to be a problem with decentralization. If Infura goes down, as it did a couple months ago, briefly, you're going to have issues with the network. All this stuff, doesn't matter right now, because everything's awesome and prices going up and nothing could be better. But when it becomes a problem, it'll be a big problem. And I don't really see too many people talking about that. If we look at ETH transaction counts, basically at all-time high. Fees also at an all-time high. Anybody who's done anything on Ethereum lately will know that. I've always said this, and I'll continue to say this. Obviously, fees are bullish. Rising fees are bullish because that means people are using the network. It also highlights, obviously, poor scalability metrics and or ways to scale. The need for layer 2, the need to not do things directly on-chain, specifically with things like Uniswap or exchanges that need to increase their transaction efficiencies, like Coinbase, which is notorious for being sort of out of the loop, oddly. In the Bitcoin network, this was the case, and I just saw some stats on ETH. They're basically, if they have a bunch of small transactions that they have to try to group together, their efficiencies are extremely poor, so they end up spending a ton of money. Fees on the network rise as a result of that, and everybody pays the price, right? There's an infinite amount of block space, a finite amount of block space, rather. So we're all going to feel that. And with everything else going on right now, obviously DEXs and smart contracts, fees are the highest they've ever been, right? So this all looks great, but it's pricing people out of the network slowly but surely, because those microtransactions or smaller transactions just can't afford to participate anymore. If you look at the gas limit, to me, I view this as block size limit, even though it's not exactly 1-to-1. It's just a nice metaphorical way to think about it. So the miners have to vote to raise the gas limit, and they've done that a few times. I haven't heard of anything in the works recently. Now, it's kind of in the miners' best interest if fees are high, because they make a lot more money, right? They've made a record amount of money on fees and block reward in January, and they're going to continue to do so long as scalability is poor, block space is limited, that sort of thing. There are issues with raising the gas limit from a network perspective. So the users are going to want to keep raising this, but people who are paying attention to the health of the network or the possibility that this might take down the network in some way are saying, whoa, we can't just keep raising this infinitely, right? There's costs, there's trade-offs to that. And I think that's where something like EIP 1559 comes into play, because they're talking about just altering the fee structure altogether. If we look at NVT, inverse metric of economic utility, and active addresses, to me, again, active addresses all-time high, transactions per day all-time high. This isn't something you see in a network that's bearish. Obviously, just massive amounts of activity rolling in to ETH. Now, it's not a 30-day active address all-time high, but it's a much more sustainable looking all-time high as far as people coming in and leaving, or just new people coming in and experimenting with smart contracts and doing all sorts of stuff. This has been a week over week, month over month continued growth of ETH active addresses. NVT is a bit deceiving because it doesn't take into account most of the DeFi stuff. It's not really built for a non-UTXO type network, but I like to look at it anyway just as a relative to where things have been historically. So if you look at NVT since mid-2017, it's basically still ranging in that same area, although this should be much lower based on DeFi stuff. And that's a whole separate conversation, because do we include that in NVT? Do we just make a new metric, which is probably best case scenario? Just needs to be retooled for stuff with smart contracts. NVT isn't really built for things like ETH. Look at DApps, Uniswap, Compound, DYDX. Basically all the non-scam stuff is finally bubbling to the top as far as total volume in the past 30 days. Users spiking heavily, SushiSwap and Uniswap in the past 30 days. So this is what you want to see. If you want to be honest about your network, what you don't want to see is scams. Gambling is fine. Games are fine, but scams, if those bubble to the top of the DApp stuff, that really leaves a bad taste in everybody's mouth, to be honest. So even though all of this is just gambling and speculation, at the end of the day, it's not binary options. It's not some dice scam type stuff. And to see this amount of volume on a DEX collectively is quite impressive. Obviously, the network is paying the price for that weight in the fees right now, but it's happening without a third party, right? It's happening on the network. Here's ETH locked in DeFi. That is stabilized. Again, if we're talking about supply demand, just obvious basic stuff. The more ETH that's locked, quote unquote, into DeFi, the less general sell pressure there is. Now, this stuff can be used to go long or short on leverage, blah, blah, blah. This is double or triple counted in some cases, so it's not exactly one-to-one. It looks more impressive than it is. But overall, it's stable, slowly rising-ish. This is what you want to see if you're bullish. You don't want to see this dramatically dropping off. This is really the best case scenario, stability, honestly. If we look at Google Trends for ETH, they hit an all-time high a few weeks ago. Ethereum, specifically the word. If we look at DeFi, crypto, all-time highs. If we look at yield farming, that dropped off quite a bit, but is increasing again. So there's tons and tons and tons of new activity, and that's obvious in the price, especially of the DeFi stuff, which as a group is up several multiples over the past year, percentage-wise. Flipping gears to technicals, 5200 EMA, yearly pivots, VPVR, volume, RSI, Bitfinex long-short ratio. This is the daily chart from Bitfinex. And one of the most curious things is this, massive drop-off in longs in the ETH USD book for Bitfinex. Despite losing I don't even know what the notional value of this is. You'd have to calculate it, but a substantial notional value. There's very little price action here. There's a bit of a volume spike, obviously. So whoever did this the right way. They sold into buying pressure, rather selling into selling pressure, right? That's exactly what you want to do if you're trading. You don't want to sell into other people who are already selling. You want to have people who are buying buy into your orders. So they were basically long from 120 and just kept adding and got rid of everything around 1200. So they bought the lows, they sold the highs. Bravo to them. They did exactly what you should be doing. And now you're left with the husk of an OI numbers as far as where it was, even back as far as 2019. I mean, we haven't seen longs this low on ETH in a very long time. So very interesting OI structure there. But looking at price, obviously all-time highs. On the way up, I'd be looking at yearly pivots, 2100, 2600, something like that. Not really a lot of VPVR support on the way down. So 700, that's $1,000 down. The 200-day moving average is down there as well. Plenty of yearly pivot support at 1,000, at 1,200. There's going to be, if this sells off dramatically, which I'm not saying is going to happen, but you got to prepare for stuff like this, obviously, because a lot of people are levered up here massively, and they're just adding. They're not doing what this person did, or this entity did, which was sell into buying pressure. They're going to end up selling into selling pressure, and that's going to just push this lower, right? This is a 30%, 50% drop. It's going to come eventually. It always does. It's what happens, right? So the question is, where's support going to be? Support's going to come in most likely at the psychological levels, 9999.99, right? Whatever it is, 1,000, that sort of thing. Volume looks okay at the highs. It's weird because there's definitely a bearish divergence on volume and RSI, despite on-chain stuff increasing rapidly. I made a joke that people are just buying ETH because they have to pay for the fees, and that's just pushing price up. Possible, right? Like, there's this like yin yang between people buying ETH to pay for fees to do stuff on ETH network, and miners just selling everything as fast as they can. And it's some sort of weird equilibrium in my head anyway. Here's the pitchfork that I've been following for the past year, and we're towards the top side of the pitchfork. So you pick 3 points, you get a rate of change. And up here, it tells you be careful being long, because this will want to mean revert at some time. There's only been a couple examples where this just skyrockets over several months, one of those being BTC in 2017. I don't know if ETH is that chart right now, but again, be prepared. I'm not gonna doomsday preacher this stuff, but when the reckoning comes, it will be swift and brutal and leave no prisoners. Here's ETH on the daily cloud. Key June support at 1,000. TK lines look great as far as separation. No dramatic C-clamp, anything like that. This looks like a healthy bull trend. And then lastly on ETH BTC, I like 0.5 in the near term. I don't know what the trajectory looks like or how it gets there, but this chart has always been a mess for me. I don't really trade it. I just look at it as a proxy of ETH versus BTC price action. You will see some BTC catch-up trading going on once the ETH move peters out a little bit. That's natural, so that'll take the ETH BTC chart down a peg as far as this crazy bull rally it's had over the past month. So I like support at the VPVR levels. I like resistance at the yearly pivot. Just super basic stuff. So overall ETH firing on all cylinders, obviously. Pricing people out of the market slowly but surely because of the fees. Scalability solutions are being discussed. EIP 1559 is, necessity is the mother of invention. So the worse fees get, the more likely there is to be a solution implemented for that. Technicals look great. I like support at 1,000 if things get squirrely. I like all-time high prices reaching for 2,000 plus. And ETH BTC, I like 0.5. Just be careful trading that because the trajectory can get quite messy.